Hey there, thanks for listening and watching this video. I'm going to talk about strong trends and weak trends. And it's always good to know when the markets are in a state that can allow you, when you get involved in trades, to be in trades where the market just keeps moving. It has the potential to keep moving. And when you use the ADX, that is actually an objective way to measure the strength of the trend in whatever you're trading. And stats show, as you know, that markets will spend more time in consolidated states, trading ranges, than they will when they're trending. So that's vital to know, especially if you have two main trading strategies that you use. A trading strategy that uses pullbacks is going to need a trending environment. If you trade ranges or range breakouts, you need consolidation. Well, the ADX, that can be a quick way to determine what strategy you should actually be using in the market. So let's have a little brief background of it. Wells Wilder, he's the guy who invented it. So the calculations for the indicator, they're just based on changes in consecutive bar highs, which is called a plus DI, and then consecutive lows, which is a minus DI, and DI stands for directional movement indicator. And these values are then combined and smoothed to yield the ADX. So the original design of the ADX, the plus DI and the minus DI, that was actually the basis for a full-on trading strategy. And all you had to do was add on some risk management. But in the trading world of today, it's often used as just a standalone filter for trend following systems, for trend. So traditionally, an ADX value above 20 indicates a trending market. Now, the exact threshold, that can vary. Some traders use a 21 setting or a 25 or a 30. Anything below those values, that will indicate a market that's possibly consolidating. Now, keep in mind that the ADX itself does not indicate the direction of the trend. All right, it just simply tells you that the market is either trending, and if it is it strong or weak. At this chart here, number one, the ADX is above 25 and it's rising, which means a trend is underway and it's getting stronger. Number two, the ADX is dropping, and while technically it's still a trend, you can actually see on the chart the price action is not really gaining or really losing any ground. And number three, the ADX is well below 25 and the trading range is pretty obvious. Now, because it does not indicate direction of the trend, you're going to have to determine the trend direction in another manner. You can use price action or another trading indicator such as a moving average. So how do you read it? Well, again, I want to talk about the basic form of the ADX, just that line, not the multi-line version, okay, and the difference between those two. Now, some traders will use the crossing of the directional movement lines, the DI plus and the DI minus, as trade entries and trend direction. I personally take them off the chart, just have the one line, right? That line will help you determine if the market's trending and the strength of that trend. The DMI version, that has the three lines, including the ADX line, and those two lines are called directional movement lines. Now, traders have to understand the limitations of lagging indicators and their ability to get caught up in the market noise. Now, I prefer using structure and price action along with the trading indicator when looking at trading. Now, the ADX, that will fluctuate between a high of 100 and a low of 0. And there are levels inside of that range that traders look at. Here are some right here. Between 0 to 24, it's pretty weak or non-existent trend. 25 to 49, the market's trending. Look at trend trades. 50 to 74, strong trend. And traders should be looking to lock in any profits or at least reduce their risk somehow. 75 to 100, extremely strong. And traders should be alert to any sudden price shock against their position. Okay, and generally the setting of the ADX is 14 periods. So if you understand those ranges, that can actually assist you in managing your trade, including when to take profits. So there are two main ways we can use it as part of a trading system. Okay, but first, you have to know how you personally trade. Do you day trade? Is that what you prefer? Do you swing trade? Are your time frames the weekly charts? Well, what about your approach to trading? So trend traders looking for continuation trades through pullbacks or range breakouts, you would scan the market for anything that reads over 25. If you're a breakout trader or you like playing inside the trading ranges, you could be looking to be in the market before that trend actually moves. So you're going to look for something less than 25, right? A weak trend. And if you're a divergence trader, you're going to have your own approach. But there's one truism about trading that you can't forget, and that is you have to know who you are as a trader. What kind of trader are you? So looking at breakout trading using the ADX. This is Bitcoin daily chart, and a lot of traders are just looking for a place to enter. And this is where the ADX can help you out. So during the scan, you find the indicator shows a weak or non-existent trend, right? So we're in kind of a ranging condition. So in doing so, we look for a consolidation structure for breakout trading. So look at number 1, the ADX is rising while it's below 25, which by looking at the price action, we know we're getting some upside strength. Number 2, this is a trading range, and we actually have a series of inside candlesticks. Now, since the nested range is close to a resistance zone at number 2, the probability is more to a break upside. So if you have a range trading plan, that can help you get into a position to take advantage of that breakout that we know eventually is going to happen. We just don't know when. Now, initial targets for profit or trade management is generally the size of the range in the height projected from the breakout level. But this is Bitcoin, so a lot of traders just look to get in and hold on. A pullback strategy. So when you trade continuation trades, we want to make sure the market has some energy to it. So when we scan our charts looking for ADX plus 25, that can have us then dig deeper into the chart with some technical analysis. Now remember, the rising line indicates a strengthening trend. The falling ADX equals a weakening trend. So here, to determine trend direction, we're just going to use a 20-period EMA. And while the ADX is rising, we're only going to consider short trades. This is a 30-minute Forex chart. So I made sure to pick a chart that did not look easy to trade, okay? There are a few things going on with this chart here. So price did pull back while the ADX was above 25. The pullback, it failed via one of the ways that pullbacks fail. And one of the ways they fail is a transition to a trading range. The ADX then drops below 25. That signals a weak trend. So if you're using a ADX greater than 25 scan at this point, you're going to skip this chart totally. Number 2, price again, it pulls back while we're in a range. The ADX is greater than 25. Now keep in mind, this is a 30-minute chart. On a daily chart, you'd be actually looking at a doji candlestick. You'd be trading a breakout as an entry into this pullback. Now, unlike a range, we would not set a pattern-specific price target. Why not? Because we're expecting the trend to continue because, according to the ADX, the trend is pretty strong. And number 3, we have a small bear flag that we can short. This is a stock chart. So on this chart, there are setups that include pullbacks and trading ranges. So remember, we scan charts for a consolidated price action with the ADX less than 25, trending markets with the ADX over 25. So we're going to have breakout setups during trending markets when we're looking to rejoin the trend. So during periods of the ADX being less than 25, we're looking for more trading ranges that can lead to breakouts and potentially the trend reviving itself, or we can just use a simple price target. Now the ADX readings and the slope of that line can help you with your expectations on a trade. So if the ADX is just about to break the 25 level, you might consider a different way to manage the trade because you're expecting a trend to begin. Now don't forget that while you can enter via price actions such as a failure test of lows and highs, and we actually see that with that last trading range, a little poke below support, using a trigger as a trade entry can keep you away from guessing and hoping when to get into a trade. The best way to use the ADX, the trend strength is a scan that a lot of traders can use. But you can often tell just the strength of the market by looking at the relationships of each swing in price. Personally, it's a fast and dirty way to scan through a whole bunch of charts to find out where your focus should be. If you like to trade the trend, traders are going to look for an ADX greater than 25. Breakout traders look for ADX less than 25. So an example would be if you trade Forex and you're looking for a currency pair to trade, you could compare the ADX readings. Which currency pair is strongest when you compare it against USD crosses, for example. Another way to use it, screen for instruments with the ADX over 50, because that's extreme trend strength. You can use a technical analysis approach, such as a failure test, where you can find counter trend trades because they are set up by the extreme strength in the direction, look for exhaustion, and trade turns over. One thing that's really important is that you have a written trade plan that includes the ADX reading you're going to need. Make sure you also have risk management parameters so that when the losing trades do come, you can actually survive a run of losing trades. Thanks for taking a few minutes to watch this video. Any questions or comments, pop them below. Hit subscribe, like this video, and we'll catch up with you soon.